OPEC and Russia being part of the early reason why crude oil sold off. The cartel announced that in September, OPEC and Russia both increased production, anticipating the Iranian sanctions taking place, and they wanted to cushion the market with some excess production. They hadn't announced it prior, but they announced it now that they'd actually already done that starting in September with an eye on the sanctions, which begin in the first week of November. So it clearly pushing crude oil down quite a bit. Could have something to do with possibly easing relationships between Saudi Arabia and the U.S., given some of the geopolitical things going on. But that was an announcement that was made overnight and hadn't been made prior to that, pushing early crude oil prices down. Then later in the day, we had the EIA report, which matched the API report. Crude inventories up 6 million barrels from the previous week on the EIA report. Gasoline inventories also up. Crude inventories are now at the 5-year average, and gasoline inventories are 7% above the 5-year average. And that's with an 88% crude oil refinery run rate. We haven't seen an 88 refinery utilization rate, 88%, for quite a while. It's been above 90 for quite a long time. And I'm talking about an 88% that isn't necessarily hurricane related. This is prior to Michael. So next week we might see the refinery rate low again, simply because of precautionary measures taken in anticipation of Hurricane Michael. Michael did not actually damage any refineries or crude oil production that we know of at this point. Very optimistic reports in terms of crude oil production and refinery operation with Hurricane Michael passing through the Gulf. And then lastly, as I mentioned, those gasoline inventories up 1 million barrels. We now go into the summer driving season with gasoline inventories above that 5-year average by 7%. Clearly, refinery turnaround can take place. It started in earnest already. Probably Michael could be another excuse to continue that. This is Bob Iaccino talking about crude oil, which again is still trading lower in the aftermarkets, down 3.25% from the CME Group trading floor in Chicago.